Good morning and welcome, everybody. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionFit.com, filling in for Mark Sebastian, who is on a secret assignment. Well, so Mario Draghi goes to negative interest rates. I don't know what the central bankers are thinking. I think they've all lost their minds. They look like this nice fortune teller lady here. So, again, reminder, check out our blog. Mark was talking about a little bit of movement. Yeah, they're going to buy I don't know. Yeah, sure. Keep doing it because it works so well. Well, let's just take a look at a couple things, right? So the euro basically is going to charge you to buy their currency, and it's up. So, I mean, we looked a lot of this yesterday in our chat room. We looked at the euro. We looked at the treasuries. We looked at potential short-term plays. The volatility we thought had priced it in, and pretty much. And I honestly think the volatility in the euro will go much lower. Yep. It just wasn't worth it, and so it would not surprise me to see some of this lower. It's not going to surprise me to see the volatility go lower. It was priced in, right? They priced in almost a 2% move or something like that. I'm not going to get interested in euro volatility until it gets into the single digits again. Currency land right now is just, I think, we'll just call it, we'll do this, okay? It's crazy town. Right? There are so many conflicting signals in the market. What I think is going to end up happening is probably the implied volatility will go down and the market kind of will beat up. It will be down and end up not going anywhere. Although generally after we have an ECB announcement or a central bankers cutting, we kind of have that, sort of one-way freight train from the bottom. And it's not going to surprise me if that happens here. Remember, again, in our chat room, we had been talking a lot about this. And, we were pricing in a $2 plus move in here at the money. We actually looked at a butter call fly and put something along those lines. Right around the 200. It's like the 200, 202, 204. Something like that might work. It's something like that certainly could work. But the thing is, generally on the central bank type news, things, the market tends to gain strength during the day, and volatility tends to sell off. Okay, so VIX is kind of getting roundly smoked. Volatility's down a point everywhere. But stocks seem to look okay and are catching a bid. So none of that would surprise me if they keep going. Okay, there would be no surprise whatsoever on that. It would not surprise me to see us up 1% on the day just on the relief rally, and we could potentially get to some new highs, new recent highs, which would be something 201-ish, something like that. No surprises. So I think actually the trade you want to look at trades where you could see some contracting volatility in indexes. At this point, with the ECB doing what they're doing, I'd have a hard time believing the Fed does anything soon. This might be the least interesting Fed announcement next week that we've had in a while. And this being a Thursday, we'll see where they mark VIX down into Friday. It's not going to surprise me if we see the 16 handle. And at the same time, there's some decent future premium as well. So I just expect things to kind of get soft. Okay. soft and squishy like a cream puff on the volatility, at least until Friday. But we are catching a little rally. So we'll see what happens. But at this point, if we continue again, like I said, that first hour of the day, you never know what's going to happen. You kind of ignore it and really see where the trend of the market's going. And generally, the trend has been to buy this up into these aggressive ECB moves, and then next week we'll look about selling it later. Right? But it might be a little early to fade this rally. That's all I got to say. If you got some long deltas, you certainly can take them, but I think it would be early to fade the rally that we got right now. All right. Any other questions, comments? Anything, send to me at andrew@optionpit.com. We'll have our normal schedule today. We'll have our gold lab today. You want to look for any kind of real tells. Look to see how the vol products hold up, and really keep an eye on how VIX volatility holds up. We looked at a few plays in here yesterday. Again, mostly looking at the downside. And I'm just looking at vol here. And if I'm not mistaken, we could easily see IV30 lows for VIX. Let's take a look here right before we're done. We are real close. If we hit, again, if we start hitting those IV30 lows for this product, get out of the way. Of course, we'll look to try to find some vol to buy at some point, but ultimately, you don't want to get in the way of it if they're going to take the vol in a little bit. Okay? Because at least for the short term, most of the central banking stuff seems to be out there, and that generally has tended to be a vol crusher and a market rallier. All right? All right, everybody, have a good day, and I will see you all shortly in our chat room.